to couch what they were doing, just in case things didn't go the right way.
Rob, what is your take on all this?
First and foremost, I got to back up for just a second because I want to just address this. Jason mentioned something about if the stock market fell, they would have done something. I want to just make the point. We don't have a stock market, okay? The stock market isn't going to fall because it's not going to be allowed to fall. And it went up because it was goosed. And the point is the stock market's never going to fall. They might drop it, but it won't fall because there isn't a market. Okay, this is a hallucination. And when you talk about the size of the Fed's balance sheet, I don't think you can any longer look at the Fed's balance sheet in isolation because you've got to combine it with the Japanese central bank's balance sheet and look at the two of them at the same time. And you've also got to put it up against the United Kingdom or the Bank of England's balance sheet. Because it seems to me that if you even go back and look at things like the tick data, which shows the build in foreign reserves, how is it that Great Britain can strap on $200 or $300 billion worth of U.S. government securities when they're insolvent themselves? You see, these things are all interrelated. It's how many layers of cheap parlor tricks, can you perpetrate on the masses before the masses say, you know what, this is just a cheap parlor trick. So when this is another thing that's been irksome to me lately is when people talk about, our capital markets or what's going on in the world of finance as this market or that market. There is no precious metals market. The precious metals are being priced, or the pricing that we're seeing is arbitrary. Interest rates are arbitrary. The price of energy is arbitrary. That's why natural gas sells for $18 in Europe and it sells for $3 and change in North America. It's arbitrary. That's why West Texas Intermediate sells for...
Andy is talking about that there's going to be bail-ins. I know that Poland, I believe, recently basically confiscated up to 50% of people's pensions. What are your thoughts on bail-ins in the United States?
Well, I think there's very good chance that you'll see bail-ins or confiscations of depositors' monies. I think that's likely to come, but I don't think that you're ever going to see, or at least in the near term, I don't think you're going to necessarily see bail-ins being done in the name of fixing the Fed's balance sheet. You see, my view on interest rates is they're basically never going to go up in a meaningful way, period, because interest rates, to begin with, the world's biggest debtor is the U.S. government, and the U.S. government cannot afford to pay market rates of interest. And they have the ability to drive interest rates. Basically, they can make long rates whatever they want as well. My view on the movement we've seen in long rates from 1 and change up to 2.9, which they are today on the 10 years, is basically a feign. And I do believe it's a ruse to make people like us sit around and talk and discuss topics about there being a market. And I don't believe there is a market because I think it's arbitrary. And I think just as they allowed or they feigned the 10-year bond up to 2.9, I'm going to say to you today, I'll bet you in the next 2 to 3 weeks, there will be a line of gibberish established in the mainstream financial press about how America is getting its financial house in order, and we'll probably see a miraculous rally in the bond market. And I mean, quite frankly, there's nothing in fundamentals that would really support or be good cause to have, say, 10 years rally from 290 where they are today down to 250. But what I'm saying is it'll probably happen anyway. You see, and all that's doing is speaking to the arbitrary nature, of what people refer to as markets, because they aren't markets. True price discovery is absent. Everything is being micromanaged. You see, and what it is, it's the U.S. government doing it. It's the Exchange Stabilization Fund. I mean, they are the guys who are charged with perpetuating the U.S. dollar as the world's reserve currency. They were established by an act of Congress in 1934. They don't publish financials. They sit over and above all laws. They aren't subject to oversight by Congress, and the wealth that they have is staggering. And you're talking about the most powerful financial institution on the planet, bar none. And this is what you're up against. This is why we don't have markets, because these guys are arbitrarily assigning values to things that make the US dollar look pretty. That's why the stock market went up yesterday, not because there was any fundamental good things happening in corporate land in America or anywhere in the world. Economic fundamentals for corporations and companies are deteriorating. And, but we have equity markets defying this. With all the money printing, the price of precious metals in nominal terms should be screaming higher, but they don't. And that's because they're arbitrarily held down. Because these are the things that are viewed as alternatives to the dollar. So of course and listen, and the guys doing this are shrouding themselves in the blanket of national security. They don't have to admit what they've done is wrong. And actually, technically, according to U.S. law, what they're doing is completely legal because they aren't subject to any law. And this is what's going on. And of course, if anyone questions the U.S. government, they deny that this is occurring. Then they call you a conspiracy theorist. These are the same people that said the NSA wasn't spying on you. These are the same people that said when you raise the debt limit, you're not increasing the debt. These are the same people that said affordable health care means you can keep your doctor, you can keep your health plan, and premiums aren't going to go up. These guys don't speak straight. And the evidence of what they're doing is all over the place. When you see a crap credit like Morgan Stanley add $4 trillion worth of credit-dependent product to their book in 6 months, like wake up and smell the coffee. Like if you put 3 elephants in a room with 2 ants, and after 6 months 2 elephants are gone, are you going to sit here and tell me that the ants ate the elephants? That's just ridiculous.
You made some really interesting points there, Rob, and one that really stuck out to me was that gold is an alternative to the dollar. And
you wait it out, it's annoying. But if you play in their paper markets, you have no idea if you're going to survive.
Rob, what about you?
I'll reiterate what I said earlier. I like to analyze markets, and there's no markets left to analyze. Real price discovery has been absent. Now, you see, I used to work in institutional markets like back in the 80s and the 90s. And back then we actually had markets. I know what a market looks like. I worked in them. And what I see today, it isn't a market. You got a bunch of people running around with protractors and rulers and pencils and erasers drawing charts. And all they're doing is they're charting frauds. And what that has to do with anything, I don't really know. When you're using arbitrarily concocted input data to put in your technical analysis model, I don't really know what bearing that has on anything in the real world, because this is the sort of thinking that you hear when you turn on mainstream TV, the financial TV. You hear them talking about, where support is in a supposed market. Like it just doesn't resonate, and it doesn't hit home with me. We've got huge issues facing us, I believe, in the very, very near future, as Andy said. And at some point, people who own real stuff are going to refuse to give it away for your latest edition of freshly printed fiat money.
Jason, any last thoughts for you?
In terms of my last thoughts, Elijah, it's not just the U.S. who's doing this. Our audience needs to realize everyone's playing from the same playbook. They're all Keynesian global central bankers. The Bank of International Settlements is all Keynesian. Almost every single country is stagflating right now. They're putting humongous amounts of stagflation into the real economy. They're causing humongous asset bubbles all over the world. And, you know, there's going to be ramifications for this. I don't know how much longer they can keep this going. Everyone has their educated guess. It is very tough to say how much longer they can keep this going. It's all a confidence game at this point. It's all a shell game. And, you know, we could see the real economies in the U.S., Japan, and elsewhere get worse and worse and worse, where the statistics say they're getting better and better and better because they keep changing the formulas and the markets keep going higher and higher and higher. So this is a really confusing situation for most people. I think people have to get themselves educated, because if they just look, you know, at the stock market numbers, which is exactly what the people in power want, they're going to see, you know, they're going to think things are good because, right, the stock market can't go higher if things are really that bad, right? So that's the question that the people in power want people asking. And, you know, they're going to say, you know, the stock market, they're going to think that the stock market can't go higher without the real economy improving. And, you know, reality is that things are really, in most sectors of the economy in the United States, not really improving unless you're in technology or a few manufacturing states where you have cheaper energy and robots and stuff like that. Or, you know, the shale oil revolution states where, you know, you have humongous amount of oil production, but not most of the United States do not have that. And they have higher taxes and Obamacare and all these other things to deal with. So I unfortunately, you know, I wish I could bring better news, but, you know, I think things, unfortunately, for most people in their real lives, unless they're buying assets, are going to get a lot worse before they get better.
Jason, people can find you at wallstreetformainstreet.com. Rob Kirby, people can find you at kirbyanalytics.com. And for you, Andy Hoffman, you're at milesfranklin.com. Once again, Andy Hoffman, Rob Kirby, and Jason Dirac, thank you so much for joining us today.
Very welcome.
My pleasure.